Welcome to belkhayate.com, where today we're going to talk about the euro dollar on February 5th, 2014. We're using the professional technical tools developed by Mustafa Belkhayate, La Rivière de Belkhayate, also called the Belkhayate River. The chart you're looking at in front of you is a daily euro dollar chart, and let's get started by applying the indicator. As you can see, the indicator has been applied. You're noticing a lot of horizontal, vertical, and diagonal lines. We'll try to break them down because we realize it's not easy to first see. We'll start with the horizontal. The lower side are called lops, or lower points. The higher side are called hips. These marks pivot off the previous highs or lows as developed by our formulas. Not all high points or low points were touched. We create hips or lops. This is based on a dynamically changing strength. The outside blue lines and the lower red lines are called envelopes. These represent the channel or the river, as you will see price traveling through. Historically, price will come up and touch or travel between these envelopes. The diagonal lines that are in brown in this particular chart represent actual trades that we would have taken. The brown lower lines will be for short. The brown upper lines will be for longs. Currently, we are in a short trade. Price is resting on the lower envelope. We have a lowering wedge, and it looks like a short would be in place. A continued short would be in place. This particular line right here is a 200-day moving average. If you'll notice, this is pretty much very much a flat line. That would be because if you look from left to right, it looks like the euro has been in a tight channel for a considerable period of time, going back to November 2012. To try to break it up a little bit more and use arrows to delineate what we're doing here, as we said before, the envelopes represented by the blue line and the red line dotted do the outside channels of price, and these are created dynamically to create our river. The 200-day moving average is this yellow and white line traveling left to right and almost flat. We notice that the lower envelope and the trade line form a wedge. This wedge is happening on the downside, and price is resting on the lower envelope itself. To try to give an idea of how tight this channel is, what we did was we created two blocks that are within the view of this chart going back to May of last year. And you'll notice these are almost identical in movements. It's not much risk for the trader. It's more of a mean reversion. You don't see too many trends. It just keeps traveling back and forth. Made an adjustment here, but these blocks can overlay each other. When you look at this wedge, the wedge isn't really going in a downward fashion like we have seen on other daily charts, but we definitely are in a short pattern at this moment. We could expect price potentially to break past this in the next week, but it doesn't mean it won't go back up to the side. It just looks very heavy at this moment. That is still going to continue in a short. As we continue, one of the tools that the Belkhayate River has is to support resistance hip-lop aging. We value the length of the bars in place, in this case the horizontal lines. In this case, the previous high point or the hip is only 26 bars old, where the low is 61 bars old. As we expand top and bottom, you'll notice that this one is 588, where this one is much lower at 105 or 216. This will show that price has actually been rising on the euro, but as we noticed before, it's pretty much in a tight channel, so it's not really a trending market or a highly rising market. So where do we see the euro traveling? What we normally do is start with the side that we believe is less likely to happen. In this case, we believe it's the resistance. The first mark where we consider where price could travel for any kind of resistance would be at the one spot 38925. Less likely to hit is the second mark at one spot 42466. We believe that this is not going to happen anytime soon. In fact, if price comes up and touches and breaks free here, we'll have another analyzation. We believe more likely is on the downside, where price is now resting on the lower outside envelope. We're going to completely ignore this 200-day moving average and say the price will stop on the one spot 32947, which is only 61 bars old. If price travels through there and we think it's more likely, it's going to go to the one spot 31039, or the second mark. And even if it came down and hit our third mark of one spot 275, we don't consider it to be anything urgent. As you can tell, the euro has pretty much been traveling in this for the past year and a half, and it'll be considered pretty much normal. To try to give a bigger picture of how range-bound the euro dollar is, we're taking this chart back to 2009. This is a weekly view. If you notice that the tight channel the euro has been moving in is actually inside a larger channel of a higher volatility going back this time period. So for the euro to travel down to this point right here doesn't seem too far of a stretch. For it to travel up in this area, it would have to pretty much it would have to violate a lot of historical lines on the daily chart, which are traveling around in this area. We also note from a fundamental standpoint that the euro, the ECB is traveling on a path of more easing, where the United States is starting to taper off of their easing. We believe this will cause the euro dollar to the euro to take the weak side, where the euro dollar should travel down more towards the short side for a period of time. We don't believe it's going to travel fast. We believe that these measures are going to be evened out because no one wants anything radical to happen. So from a short standpoint, it seems more realistic. Thank you. If you're interested in more analyzations, go to belkhayate.com. Thank you.